Hey everyone, Couch Investor back to another video for today. So we're gonna finally cover Lemonade. We've covered Unity, Teladoc, Nvidia already yesterday night. If you missed those videos, those will be in the top right corner. Now for Lemonade, keep it simple. It was a pretty good quarter. As of now, it does seem that, well, Q3 was actually peak losses. So right now, let's wait and see how they'll perform in 2023 when it comes to profitability and growth. They're already giving us a couple of hints during this quarter. Guidance, to be honest, not the best guidance. After such a good quarter right now, I was expecting maybe continued good performance, good execution. That's not the case. They're giving us a couple of excuses throughout the report, so we're going to go over that. But I want to say one thing with regards to management. A couple of people there, higher ups, I do have a feeling that they are thinking of Lemonade now as a publicly traded company. They're thinking that this is an activist vehicle. I think you are mistaken. We are shareholders because we believe this company will generate a profit in the future and will return value to the shareholders. We are not here giving you money as a charity so that you could use your platform to become an activist. That's not how it works. And I do feel that this is becoming a trend throughout a lot of startups that, I don't know, in the last couple of years have become a bit bigger or have gained some traction because, well, the market was much better. But right now, suddenly they all think, oh, I'll use my voice to become an activist. No, you're someone, you're an executive, you're CEO, CFO, co-founder, doesn't matter, of a publicly traded company. Your sole job is to return value to shareholders and to, well, manage your company correctly. Not to use your company as a sort of activist vehicle. That's not how it works. Rant over. We're going to have a look at the earnings report. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couch investor. All right, so in-force premium increased 64% to $625 million. Premium per customer grew 30% to $346 million. Total customers grew 27% to just over 1.8 million customers. So that's, again, fine. We're probably going to reach 2 million by the end of the year, if not more. Let's hope so. Then, gross loss ratio. This is an aspect that, to be honest, whenever we'll reach those goals of 70% or so, I think I'll have to pop a bottle of champagne because right now it's still not great. It's 89% gross loss ratio. Yes, it's down 7% year over year, but still far, far away from the ideal metric. I know, still very young company, still growing, still launching new products. So of course, in the first year or two, this is where you take your big hit. I know. But, I mean, preaching AI, machine learning, etc., you would have expected this to be a bit better already. But hey, I guess time will tell. Then, with regards to gross earned premium, 69% growth year over year to $151 million. So that's great there. Now, they say here in short, which is great, we'll keep it as short as possible. So top line, our fourth quarter saw 64% top line growth with in-force premium of $625 million. They talk here about the gross loss ratio. We've talked about that. Then bottom line, adjusted EBITDA loss contracted to $52 million, down from $66 million in Q3, while net loss for the period was $64 million, down from $91 million in the prior quarter. So, if Q3 was really peak losses, the business should become more profitable in the future. And if we do not see, well, the bottom line becoming better in the coming quarters, a lot better, then there might be an issue here. Now, the good thing is that for 2023, they've already set some goals here. So cross-sells and upsells, so ADR, loss ratio, and growth. Now, when it comes to ADR, I like to see the focus there because we did talk about this a couple of times in past earnings quarters. Right now, we can scroll down here. We can see that they have improved. They went from 82% to 86%. I believe the average in the industry is between 94 and 96%, maybe 96% at the midpoint. Don't quote me on that, but this is around those numbers. So they're still far away from that. But in Illinois, where they are basically already active a long time with a lot of their products, you can clearly see that 95% is achievable. And that's something that is great and that will certainly improve the overall business, because being at the 82% mark, well, wasn't such a great picture. Then when it comes to the loss ratio, I'm not going to go over all of this, but they again explain their technology, AI, GYM, etc., how they navigate when there is like a cat event. If you want to read this and if you want to go over the earnings, the investor day presentation, please do so, but this will become a much too long video. Now, with regards to growth, because Lemonade is in the insurance market, because there is high inflation, etc., they have to well adapt their policies, and this has to pass through regulations, etc. So they say here, the unusually rapid pace of inflation in 2022 may be showing signs of slowing, and these mismatch holdouts are shrinking. Yet, inflation in pet services and home and car repairs have trended disappropriately high, and some regulators have been slow or resistant in approving commensurate rate adjustments. They've talked about this already in the past as well. They applied to adjust their rates. Of course, it takes time, and if it is not approved, then obviously they are taking a hit. Well, they're not getting the amount of money that they want, so we are taking a hit as a shareholder. They say here, our determination to exclude such areas from our growth plans means that for now we expect overall annual in-force premium growth of approximately 11 to 12%, though we'll look to catch up to our multi-year target of 20 to 25% as our rates come online. When will that happen? We don't know. Then by saying here they fully expect 2023 to see continued improvement in loss ratios, efficiency, and growing with our customers, and that for Lemonade is the whole kit and caboodle. Now with regards to revenue, that increased quite a lot, and we know exactly why. So fourth quarter revenue was $88.4 million, an increase of 116% year over year. That's because, again, they reduced the proportion of earned premium ceded to reinsurance from 72% to 58%. Then when it comes to net loss, again, we can clearly see here that it's better on a year-over-year performance. Of course, for the full year, you can still not see that. But if truly we have peaked the losses phase, then we should improve a lot in 2023. Now, probably the issue that the market had was guidance. So for Q1, they expect in-force premiums of between $635 and $637 million, gross earned premium of between $148 and $150 million, revenue of $87 to $89 million, so really not much growth quarter over quarter, adjusted EBITDA loss of between $65 to $63 million, stock-based compensation expense of approximately $15 million, so nothing really changed there, especially not on the full year. Then when it comes to, well, the full year in-force premium, so they expect around $700 million there, gross earned premium around $636 million, revenue to come at the midpoint of $377 million, and then adjusted EBITDA loss. There is no real improvement here. So adjusted EBITDA loss of between $245 and $240 million. So no real improvement when it comes to adjusted EBITDA for the full year. I mean, you can clearly see it here, right? Adjusted EBITDA for year ended 2022, it's a loss of $225.1 million. So yeah, question mark. Again, it might be because they expect Q1 to be not such a good quarter, and that's why adjusted EBITDA for the full year was impacted more than it should be. I don't know, but right now the picture is not that great, and maybe that's why the market reacted negatively. Overall, again, well, the quarter that we had was a good one. The guidance, not so much. Since we are forward-looking, I'm really not willing to add at the moment. I'll be sitting on my hands, see what happens with Lemonade. It's not such a big position for my portfolio, and since I'm already down quite a lot, well, I'll just let this one ride. Of course, do share your thoughts down in the comments below. What did you think about this quarter? If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.